Welcome to CNBC TV 18 Special Conversation. I'm Shireen Bhan and we're in conversation with Mr. Sanjiv Goenka. Mr. Goenka, it's an absolute pleasure to have you back on the show. It's been a while since you spoke. So let me start by getting a sense from you about where things stand at a group level and more importantly, in terms of the appetite for expansion, in terms of the appetite for further capex. What does FY24 and FY25 hold?
So thank you, Shireen, for having me. Yes, I must confess it's after a long while. I've actually been absent from all media. And if I had to come back, there's no one better than CNBC TV 18 and Shireen Bhan.
Thank you for that.
So, yes, for us, this is now a period where we're going to be investing significantly across our businesses in terms of research, in terms of capacities, in terms of growth. The last few years were a period of consolidation, of reinvention, of application development. But now all that is done, practically done. So it's now going to be very high on in terms of growth. So all our businesses will be expanding significantly. But the biggest expansion will be in the chemicals and the carbon black sector. But of course, every business is growing exponentially.
Before I get specifically to PCBL, because you said that that is going to be the growth engine in terms of expansion plans, but what would the group level capex be, for instance, over the next 12 to 18 months?
Over the next 12 to 18 months, we will be spending about 35,000 crores. And over the next 3 years, about 50,000 crores.
And what's the growth aspiration? You've now got a market cap of almost, what, $7 billion? What's the growth aspiration?
We touched 70,000 crores this morning, I'm told. And this is without taking our unlisted ventures. But over the next 30 months, 2 lakh crores.
2 lakh crores is the target that
Yes.
you're working with. Let's now talk about PCBL in specific. It is, of course, as you pointed out, the largest producer of carbon black in the country. I'm just taking a look at your financials. From 3,244 crores in FY20, you've gone up to 6,420 crores in FY24. There's been a margin expansion from 14% to about 16%. Your profit after tax has gone from 288 crores in FY20 to 491 crores. What's the ambition? What's the aspiration, both on growth as well as expansion for PCBL specifically?
So PCBL will grow in rubber blacks, but more importantly in specialty blacks, so where your margins become much higher. In rubber blacks you make X%, in specialities you make X plus so much, and that's the reason for the 14% going to 16. The 16 would actually probably go up to about 17, 18 as we go along. But more importantly, or as importantly, we will be expanding in chemicals through our acquisition Aquafarm. So we will be expanding in phosphonates in terms of capacity. We will be back integrating into yellow phosphorus. We will expand in the oil and gas chemicals. So we are going to revamp our manufacturing facility in Texas. We are going to add a manufacturing facility in addition to our blending facility in Riyadh. And we are going to start this whole thing on green chelates, which is biodegradable product that goes into the granules that go into the detergents industry.
Okay.
And so there are not many players in the world who do this. So we will be one of the 2 or 3. And in addition to this, we are getting into the cathode chemistry for the EV batteries.
Okay.
We recently took over a company called Kinaltech in Australia, which has successfully tried this on a pilot scale. Now we will take them over and make it commercial. So it's a lot of things in chemicals and rubber blacks and specialty blacks. And from this level of profit, I would expect to see over the next 5 years at least a 5 times growth.
A 5 times growth from
5 times growth from what it was, 490. I would expect it to be at the 490 translating into between 2,400 and 2,500.
And you know, as far as the mix is concerned, because you said the focus is now going to be on enhancing or expanding the specialty portfolio as well. How do you see that mix changing? What is the target there as far as the mix is concerned?
So I think the specialty will become 60% and the rubber blacks will be 40 in terms of value of contribution. In terms of volumes, of course, rubber blacks will be higher, but they contribute lower. So in terms of value of contribution, it will be 60-40.
You talked about the acquisition of Aqua Farm for 3,800 crore rupees. Is it all done now?
Yes.
So it's complete. Are you looking at more M&A, and any areas in specific that you would like to look at M&A? And will you fund these via debt or internal accruals?
So it'll be a combination of debt, internal accruals, and maybe equities at some stage. So it's got to be a combination. But I'm a debt-averse person. So I don't believe in debt. So debt at best or worst, as the case might be, is very short-term in my case. So even if I take debt, at a group level, we will never exceed 1.5:1 debt equity. That is something that we are very clear about. And that is the guidance to each of the companies. So PCBL as a whole remains at about 0.7:1 despite everything. And it'll go down. But as we keep expanding, as we keep investing, there will be some long-term debt. But everything that will get repaid very soon by way of internal accruals.
So anything on the anvil, anything on the radar at this point in time in terms of future M&A for PCBL specifically?
You know, M&A, I think, is becoming a way of life. So there are dialogues happening across at any point in time. But 1 out of 10 actually transpires. I mean, it actually gets converted into reality. So it's premature to talk about it, but yes, there are dialogues happening.
So finally, before I move on to First Source, the last question as far as PCBL is concerned, what kind of capacity expansion do you believe you're going to be able to take on between now and the next 5 years, the target that you've set?
So I think over the next 5 years, we certainly see ourselves doubling capacity between greenfield and brownfield. We see ourselves greening a lot more in terms of product and product mix. We see a lot more expansion in the chemical space. So we are just setting up a new factory in Maharashtra and Mahar for phosphonates and oil and gas chemicals. I just told you we are going to revamp our factory in Texas. We are going to effectively set up a new factory in Riyadh. So then we will be setting up this green chelates facility. So it's a lot of activity across the board.
Well, speaking of activity, let me now move from chemicals and move to talk about what's happening on the IT side with First Source. You've got a new CEO coming in September, Ritesh Idnani. You know, the guidance for FY25, a growth of between 10 to 13% and margin of 11 to 12%. How is this business shaping up for you? Again, what's the aspiration now as far as First Source is concerned? Since you are setting 5-year targets at this point in time, let me ask you what you hope to do with First Source.
I would actually expect profits, PAT, to grow about 2.5 times in the next 3 years. We've got our building blocks clear. We are expecting, what we've done is very simple Banya unlocks.
Cash flow and cash is king.
Cash flow and cash is king. So shift to high margin businesses, focus on costs, shift to expanding wallet share with existing customers, move to more and more higher margin businesses as opposed to lower margin businesses. We are acquiring as we go along. We've just in the process of completing an acquisition that we did in America recently, and the integration is just about happening. And that's a constant process. So to get into higher margin offerings, to become more and more relevant to our customers, to shift the onshore-offshore mix, to reduce attritions, to invest in people and quality of services, to invest in technology, to invest in analytics. So a lot is happening, and we are getting to growth rates which are not only aggressive but attractive. I can't speak much more about it, but at this point in time, we are very satisfied with what we've achieved. We have a new team, virtually a brand new team, and that team is beginning to deliver. And I see this delivery becoming stronger and stronger with each quarter. So where we were having, say, one major win in a year, we are now getting 2 wins a quarter.
Okay.
And these are major wins. And the target is to get to 3 wins a quarter. So,
and the size of the wins?
So it differs from, I mean, some could be 10 million ACVs, some could be 15, some could be 20, some are bigger. Very soon you will hear of one major win in the next maybe 10-15 days. So there'll be lots, and there's lots of exciting things happening in terms of product, in terms of margins, in terms of wins, in terms of consolidation. So overall, we now have a complete grip on what we are doing and what we need to do to improve PAT 2.5 times in the next 3 years.
Okay. You talked about that acquisition, the Quintessence acquisition that you did. Are you looking at more, and any specific capabilities, any specific geographies that you wish to address? Why the M&A route? And, you know, in terms of growth aspiration, you laid out for me what you believe is likely to happen in terms of profits. But the aspiration of taking on the Infosys, the Wipros, the HCL Techs of the world, is that an aspiration as well, you know, for the future?
You know, aspiration has no boundaries and it's limitless. And the one thing that you learn from Prime Minister Modi, and you get inspired by people like Mukesh Ambani, is that scale has no limits. As long as you can execute, as long as you can finance at a low cost, scale is just a number. And I'm trying to speak this language with my team, that let's reimagine aspirations, let's reimagine scale, and let's do it in a manner where we are not looking at debt as a way of doing it, but we look at internal accruals plus capital to actually get to that. And I think the change in our PSG has happened in terms of mindset, in terms of approach. And we are reskilling ourselves. We are getting people who can actually deliver on these aspirations and whose aspirations match our aspirations. So I think we're in a happy space right now.
Let's now talk about CESC, both in terms of demand at this point in time. What's the outlook? And if we can get an update from you on what's happening as far as Noida is concerned, what's happening with the Dhariwal and the Haldia IPP as well.
So that's again another space that's going well. So we are investing not only in distribution, but we are investing in generation as well. So right now, over the next 2 years, we are going to set up 3 gigawatts of renewables, which is hybrid between solar and wind. The projects are under execution right now. And this will go into our distribution networks in Calcutta, in Noida, in Rajasthan, in Maharashtra. So we will take them across our distribution networks. And so they're profitable, they're green, they're forward-looking, and they're margin enhancing. So it really works across all parameters. And it's something that we are very excited about. So this is the beginning in the green energy sector. 3 gigawatts to begin with, ultimately going up to 10.
Okay.
And we are looking actively at hydrogen electrolyzers. We're very inspired by the finance minister's talk on
the green energy transition.
And the modular nuclear plants. And obviously that we understand is more futuristic. but it's something that we are looking at very keenly. And so there is a lot happening in that space. And the whole green energy part is being driven by Shashwat. I'm happy to say he's actually doing a way better job than I've ever done.
You know, you talked about modular nuclear, and this was part of the finance minister's budget speech as well, one of the budget announcements. I mean, you know, by when do you expect to formalize or finalize your decision to foray or get into this space?
So I think we are still waiting for the government announcements on the actual policy. It's the intent of allowing private sector that's been announced. So once the policy is announced, then we will actually formulate our entry into this whole space.
In terms of capacity addition, you know, as far as CESC is concerned, what should we expect between now and the 5-year target?
So 3 gigawatts over the next 2 years. I think another 2 in 2 years thereafter, and another 5 in 2 years thereafter. So in 6 years, about 10 gigawatts.
And the kind of investments that it would entail?
So it would be about 70,000 crores.
70,000 crores. Tariff rationalization, any indication, any plans on that front at this point?
So we've actually increased the fuel surcharge, which we are entitled to by law, in Calcutta last month. So it's the first time in 7 years we've actually looked at even recovering part of our costs. But that's a great initiative by the central government, which says that every quarter you actually just charge, and the regulatory commission will then examine your costs. And if you're off, you make corrections.
On the privatization of discoms, you know, any forward movement there, any indication?
So we do believe that a lot will happen, and we expect it to happen soon, but let it happen. We are still awaiting for the High Court judgment on the Chandigarh thing where we won the bid, and we are told now the matter will be heard quickly. So hopefully it'll get disposed of and we can take over Chandigarh. It's a very attractive city and an attractive zone, and we do believe a lot can be done there.
So, you know, finally, a big picture as far as CESC is concerned, both in terms of growth as well as the aspiration on profitability.
So as I said, 10 gigawatts by way of renewable energy, hydrogen electrolyzers, possibly nuclear. So that's at a strategic level. At a granular level, more on distribution, more efficiency on distribution, getting in cheaper power into your distribution zones to make them more profitable. So it's a combination.
Well, now let's talk about FMCG and the plan as far as FMCG is concerned. Where do you get confidence from on what is working for you on the FMCG side? And again, both in terms of investments, in terms of new forays, what is the plan at this point?
So the snacking part, the better for you snacking, is actually beginning to work. And we are now at about a 600 crore beat rate annually, which is going up every month. And at this level, we are beginning to see the losses coming down sharply. Okay. We don't yet make profits. We're not expected to make profits at this level. But we can see now the path to 1,000 crores, which is where we start to break even. So that foray is actually working well.
Well, when do you anticipate a break even for the FMCG business?
I think another 2 years.
And what kind of investments are we still talking about? Are you continuing to make investments?
You will look, yeah, we will continue to make investments. The losses now would be about 200 crores a year as opposed to 350. So that's a significant reduction. And there will be investments in capacity and products. But overall, I think it's something that's trending very well. Yes, we are 1 year behind what we had anticipated, but we're pretty much there.
So no pulling back on either investments or aspiration in terms of the portfolio mix?
Not at all.
So what would be the investment plan for FMCG as well as the products
FMCG doesn't take great investments in terms of capacities, because you can actually get third parties to manufacture for you. So it's a asset light model. So your investment really goes in terms of brand building and which translates into losses till you get to a certain size.
Linked to that, let me also quickly ask you a question as far as the retail business is concerned and what we can expect for Spencer's. What would the expectation be there in terms of a quarterly run rate?
So I think the plan is, and we have to yet get there, is by the end of the year to get to a cash break-even, which I think we are well on the path to doing. Nature's Basket continues to do very well, and that is where we are expanding the footprint.
Quick commerce, because that seems to be the current trend that is exciting, of course, the aggregators as well as the consumers. Is that something that you're looking at?
Yes, so we did take over a company which was in quick commerce. That's doing well, but we are not going crazy expanding, because the more you expand, the more you lose. The more you lose, the more cash flows you need. So we are balancing cash flow requirements with growth, so it's modulated.
So the growth expectations, the revenue expectations, and the investment plan for Spencer's.
So investment will be more in Nature's Basket at this point in time, where we are growing. So it's small, so there's not significant investment in retail, but yes, we do believe we will get to a break-even in the next couple of quarters. So that's a very significant step forward. Once we get there, then we sit back, evaluate, and calibrate.
Okay, and finally, let me ask you about the ambition on the sports side. And we've of course been seeing you on television in the dugout as well, Mr. Goenka. But how has that bet panned out for you? And more importantly, are you willing to take bigger bets from here on?
Well, it's something that's been very successful. We got the franchise for 7,000 crores. We are reading that Gujarat Titans is getting sold for 12,500 crores. I don't know whether it's true or not, but that's what we read. And if that is indeed the case, then in 2.5 years, 7,000 becoming 12,500 is not bad at all.
So would you look at monetizing this in your franchise in any way?
No.
No plans at this point in time. Okay, Mr. Goenka, it's been an absolute pleasure. It's great to have you back on the channel to give us a very comprehensive view of the growth engines as well as the growth plans for each of your businesses over the next 5 years. Appreciate your time. Thanks very much.
Thank you so much, Shireen. Pleasure being here.
Well, with that, it is time for us to wrap up this CNBC TV 18 special conversation. From all of us here on the team, goodbye and many thanks for watching.